Hey guys, welcome back to the channel. Today I'll be going through my stock analysis for Nvidia and sharing my research on the company. I'll be talking about their products, their fundamentals, and at the end of the video I'll be going through two valuation models for Nvidia to see if the stock's trading at a good price. We have a lot to get through in this video, so let's get started. When it comes to semiconductor companies, Nvidia is probably one of the most well-known and popular companies in the industry. Their shift over the last 10 years from a simple hardware company to a company pioneering some of the biggest advancements in our lifetime has been incredible. And it's been one of the most exciting companies to follow for me personally. Nvidia was founded in 1993 by Jensen Huang, Chris Malachowski, and Curtis Preem, and Jensen still runs the business today and has been critical to Nvidia's success over the years. In 1999, Nvidia changed the world forever when it invented a piece of hardware called the GPU, or Graphics Processing Unit, which allowed for massive advancements in computing, especially gaming, because the GPU had the ability to render huge amounts of data really quickly, compared to a traditional CPU, which was much slower. In the early days, the GPU didn't have that many use cases, and they were essentially used exclusively for gaming purposes. But after some big technology advancements by Nvidia in the last 10 years, GPUs have branched off massively from gaming, and they now power most data centers and supercomputers. And the use cases for GPUs have absolutely exploded over the last decade, and they're now used for application acceleration, physics modeling, medical imaging, clinical research, machine learning, AI training, and much more. Because the GPU has the ability to process terabytes of data really fast, it now takes just hours to process things that would have taken weeks beforehand, hence the term accelerated computing. Nvidia keep pushing the parameter of what's possible with GPUs every time they release a new generation, and when they released their A100 GPU in 2020, it really blew the world away in terms of its performance and scalability. When they released the A100, they also showcased an incredible new product, something called the Nvidia DGX system. Basically, in layman terms, with their DGX system, they figured out a way to take their extremely powerful A100 GPU and strap like 8 of them together on a single board, and have them all be connected and linked to create this single absolute Goliath GPU, which is specifically designed for massive AI workloads. All of this innovation have allowed Nvidia to gather a who's who list of customers, with virtually every cloud provider, robotics company, and supercomputer using Nvidia GPUs for a wide variety of use cases. As well as GPUs, Nvidia have also been branching out into adjacent businesses, creating potentially large revenue streams down the line. Nvidia recently made an announcement of their introduction into the CPU market with their ARM-based chip called Grace, and have also been venturing into software with the Omniverse platform. So the mothership that is Nvidia is constantly spawning new businesses that complement its core business.
We are entering the age of robotics. Robots of all forms and sizes, with wheels, with arms, with legs, with wings, on the ground, in the air, underwater, and even robots that are stationary watching other things that move and providing outside in perception are increasingly being deployed. NVIDIA Isaac is our robotics platform. It has 4 pillars. The first pillar is about creating the AI, a very time consuming and difficult process that we are making fast and easy.
There's a lot going on at Nvidia, and it can be hard to keep track of it all. I've spent probably 5 minutes talking about the business, and I haven't even covered gaming, software, their new processor, the DPU, or their HGX and EGX systems. If you're interested, I can do a full video where I just talk about Nvidia's products, because if I keep going in this video, I won't get time to cover the other aspects of the stock analysis. So to move on from this section, the overarching point is that GPUs are an absolute necessity for high performance computing, AI training, cloud computing, and gaming. And in order to have the computing speed that we have, we need to have either an AMD or an Nvidia GPU, with Nvidia taking the majority share at over 80% market share. The next part of the stock analysis is to look at Nvidia's return on incremental capital employed and the reinvestment rate to see if the business is a long-term compounder. And as usual, I look at the short term, the medium term, and the long term. The 5 and the 10-year results are pretty much identical, so I'll mainly be talking about the 10-year and the 1-year models. In the 10-year, the results are really good. They have a return on incremental capital of 19% and a reinvestment rate of 130%, giving them an intrinsic value compounding rate of 24% over the last 10 years. This is a great result, and it shows Nvidia has a high return business model, which makes it high quality. And they also have a high reinvestment rate, which makes Nvidia a compounder. If we look at the base capital, we can see they've been growing their capital employed exponentially over the last decade, which is what I like to see. Unless a company has some insane unicorn type business model, where it can just keep growing its earnings for decades without new capital, 9 times out of 10, when a business generates high returns on capital employed, you want them reinvesting everything they can back into the business. The more the base capital grows, the more the company grows its earnings, and it creates a compounding effect. A business may generate high returns, but if it's not reinvesting back into the business and growing its base capital, then the earnings will stay the same over time, unless it's the unicorn type business I mentioned before. There are companies out there that can keep growing earnings for 10, 15, or even 20 years without new incremental capital, but they're extremely rare. So in general, I look for high return companies that compound their base capital and their earnings together. Ideally, you want the return on capital to increase over time, while simultaneously growing the base capital to create a double compounding effect. These types of businesses are long-term compounders and are the best types of businesses to own, unless you can find a unicorn that can do it without having to reinvest. And we can see this is the case with Nvidia in the short term. If we look at the 1 year, we can see the return on incremental capital has increased from 19% to 21%, and the reinvestment rate has also increased to a massive 200%, giving them an insane compounding rate of 42% a year. We can see Nvidia are really compounding the base capital with a huge jump from year to year. And despite this massive reinvestment, they still generated a higher return on incremental capital, which is very impressive. Overall, I think Nvidia has a great business model. They consistently reinvest all of their earnings, and they keep pumping out high returns on their ever-growing capital base. They've also showcased an ability to increase both the reinvestment rate and the return on incremental capital as they scale larger, which creates that double compounding effect that we're after. And finally, because they have what Monish Pabrai calls spawning DNA, they're constantly able to spawn new businesses, which creates more reinvestment opportunities and extends the runway for the business. It's pretty hard to critique Nvidia's management team because of what they've achieved and how good their returns on capital are. They're also founder-led, which is what we like to see with compounders. And Jensen owns a decent percentage of the company, so we can assume his interests are aligned with ours as shareholders. When I'm analysing how long the runway is, or where the destination is for Nvidia, it's one of them businesses that is really hard to tell because it's an industry with rapid change. In saying that, I personally feel like Nvidia has a long runway to keep compounding. They're always innovating and advancing what's possible in computing, and I suspect their products will be the driving force behind many of the key advancements in our lifetime. They do face intense competition from AMD, but I also think it's a case of the rising tide lifts all boats, and I think the market is large enough for both companies to grow and coexist together. For my Nvidia valuation, I used 2 different valuation models to try to estimate their intrinsic value. For the first model, I tried to map out the next 10 years for Nvidia by estimating their future revenues for each individual segment, and then estimating a free cash flow margin to get future free cash flow. As always, I'm just trying to predict the future, so please take these estimates with a grain of salt. So for their revenue, I took their current revenue for gaming, data center, software/omniverse, and auto. Then I estimated their growth rates 5 years into the future and 10 years into the future, with varying growth rates for each segment. If you want, you can pause the video to look at the growth rates in detail, but essentially, over the next 10 years, all up, I have them reaching about 143 billion in 2032, which is a growth rate of around 19% a year overall. For the next part, I assumed a free cash flow margin of 35%, which is a little higher than they have now to reflect a greater amount of higher margin software and data center revenue. This gives me free cash flow in 2032 of 50 billion for Nvidia, which is a compounded growth rate of 20% a year from today. Finally, to get their future market cap, I assumed a free cash flow multiple of 25 to reflect Nvidia's high return business model, but potentially slowing reinvestment rate. Nobody knows what will happen 10 years from now, so I'm just assuming they slow down to be conservative. So using a multiple of 25, that gives me a future market cap of around 1.2 trillion for Nvidia in 10 years, which is a return of around 13% a year compounded, or about 4x in 10 years. These are my pretty generous assumptions for Nvidia over the next decade, and I tried to be pretty generous with their future growth, while still being somewhat reasonable. I'm sure a lot of people will consider it either too high or too low, but I'm pretty happy with these estimates, and it gives me a range of where I think Nvidia will be 10 years from now. For my second valuation model, I used a simple discounted cash flow, which was made even easier because I already have my 10-year free cash flow growth rate from the first model. So I have their current free cash flow of 8.1 billion and growth rates of 20% to get me to 50 billion in 2032. Then I used a discount rate of 10% and a terminal multiple of 25, which gives me an intrinsic value of 620 billion for the entire business. And to get the per share intrinsic value, I used their current shares outstanding of around 2.5 billion to get a fair value of around $250 a share. That's my fair value for Nvidia stock based on my future projections. And as always, I could be way off, so please don't take this as a buy recommendation and always do your own research. So based on my estimates, despite being optically overvalued, as Monish Pabrai would say, Nvidia could actually be undervalued at the current price, courtesy of the broad market crash which caused Nvidia to fall by over 50% in the last few months. It does still trade at a pretty high multiple compared to the general market, but it's because most people know how great Nvidia's business is and how bright their future is. It wasn't that long ago that it was trading at over $300 when everybody loved Nvidia, but now a lot of investors seem to be doubting Nvidia's future, which could present a big buying opportunity if you believe in the company and it's within your circle of competence. If I personally don't buy Nvidia, it's only because I like other companies even more. But in saying that, based on the current prices, there's probably a good chance that Nvidia will end up in my portfolio soon. I'm currently wrestling with using that money to add to one of my existing holdings, or using it to start a new position in Nvidia. And I'll be posting in Discord what I end up doing for those who are interested. So that's my stock analysis for Nvidia, and I hope you found it interesting. If you're interested, I've done stock analysis videos like this one for Tesla, AMD, Alphabet, and Meta, with many more well underway. And I frequently make polls where I ask what companies you want to see next, so make sure you keep an eye out for them. If you enjoyed the video, please hit the like button as it really helps the channel grow. If you want to see more videos like this one, be sure to hit that subscribe button. If you've watched the video all the way to the end, thank you so much for watching and I really appreciate your support. And if you're still bored, I'll put another video up in the corner that I think you'll find interesting. And as always, this video is not financial advice and I'm not a financial advisor. So please always do your own research before making any investment decisions. So that's it for this video. Thank you so much for watching and I'll see you guys in the next one.